The Honorable Minister of State Foreign Affairs, Your Excellencies, ambassadors and heads of diplomatic missions in Nigeria, other very important dignitaries here present, ladies and gentlemen, good morning, and let me also welcome the members of the press to this meeting. When I received the invitation from the Minister of Foreign Affairs, he said that the members of the diplomatic community would like to hear from me about issues bordering on economic policies and the current Naira redesign policy that the central bank recently introduced and its import and how it affects our businesses and our economy. I have a short speech to present. Hopefully with that I would be able to touch on some of the points that you may want addressed. Then after that we can go into the interactive sessions where questions will be asked. Good morning, Your Excellencies, distinguished ladies and gentlemen. It is indeed a great pleasure and a privilege to make this brief remark on the recent policy of the Central Bank of Nigeria in view of prevailing global and domestic developments that affect our economy. I most sincerely thank the organizers, and I mean Ministry of Foreign Affairs, for the opportunity given us to clarify the contextual realities that shaped our decisions and to illuminate our expectations for the future. I'll equally use the opportunity of this forum to acquaint you of the Naira redesign policy of the Central Bank of Nigeria. In a contextual format, let me say that over the last few years, the global economy has undergone a series of path-altering shocks, including devastating effects of COVID-19 pandemic and more recently, the profound dislocation from Russian-Ukrainian war. Together, these and other disruptive global developments have influenced monetary policy globally. Monetary policy decisions of central banks in many countries as they struggle to balance the objective of price stability with the desire for long-run output stabilization. During the last Monetary Policy Committee meeting of the Central Bank of Nigeria, we noted that global macroeconomic conditions remain severely distressed as the year-long war in Ukraine persists with no end in sight. Prevailing risks to short-term prospects are escalating, reflecting the adverse effects of the conflict on output and inflation. Global output is highly uncertain, and as fragility broadens across countries, recoveries seem to have stalled and growth momentum slowed. Although inflation is beginning to moderate in some key economies, profound energy supply bottlenecks had steepened prices to levels that dramatically debilitate business confidence and erode households' purchasing power. Massive layoffs in the US, protracted war in Europe, that exacerbated commodity and energy supply shortages, and chronic slowdown in China jointly portend global recession. Global fragility is compounded by widespread monetary tightening to combat inflation. According to the IMF projections, CAP, global growth at 3.2% for 2022 and 2.7% in 2023, reflecting lower estimates for both advanced economies and emerging markets and developing economies. For domestic underdevelopment, amidst the dampening effects from global conditions, short-term outlook of the Nigerian economy remains stable and tilts to the upside. The steady pickup of economic activities observed throughout 2022 is expected to continue in 2023, keeping recovery on track. This follows programmed measures to mitigate external shocks, curtail domestic constraints, strengthen economic fundamentals, elicit structural rebalancing, and boost long-run prosperity. Regardless of existing fragilities and relentless exogenous threats, the Nigerian economy has so far largely withstood powerful global pressures. With a 2.25% year-on-year growth during the third quarter of 2022 versus the 3.54% during the second quarter of 2022, GDP remained on track and could consolidate in 2023. This followed the sustained rebound of business activities, increased labor mobilization, and expanding productive capacity, especially in the non-oil sector. At 4.27% growth in the non-oil sector, remained robust during the third quarter of 2022, reflecting the faster 7.01% expansion in services and 1.34% in agriculture. However, contraction of oil GDP worsened to minus 22.67% due to acute impairments in that sector. In-house analysis of overall GDP projects 2023 growth at 3.01% vis-a-vis the 2.8% estimated for 2022 and 3.4% recorded in 2021. This observed performance was buoyed by continued Central Bank of Nigeria interventions to support critical economic activities, resolved long-standing structural constraints, and bolstered domestic productivity with favorable effects on market prices. Though year-on-year inflation rate at 21.34% in December 2022 remained above medium-term average and the bank's tolerance band, it eased by 0.13% points from the November outcome. This marginal reduction reflected the 0.38% point drop in food inflation to 23.75%, as against the 0.25 percentage points rise in core inflation to 18.49%. This year-on-year disinflation is feasible, especially as seasonality factors elevated month-on-month inflation by 0.32 percentage points to 1.71% in December. The Monetary Policy Committee noted that headline inflation at over 21% is unacceptably high, or unacceptably remained at a growth inhibiting level and must be resolutely tackled. And that is the reason monetary policy remains in a tightening zone, and the general belief in monetary policy is that we will not. It will be difficult for us to adopt monetary policy accommodation unless we see inflation trending aggressively lower to the very, very low double digits. Generally, global forces, infrastructure and energy bottlenecks, security challenges, electioneering cycle, plus global logistic and distribution inadequacies are propping domestic inflation. Some of these factors are being tackled through our developmental initiatives. Near-term outlook suggests noticeable disinflation in 2023 if adequate policy measures are timeously undertaken. Observed inflation levels also reflected the liquidity conditions in December 2022. At 11.61%, the 0.85 percentage points month-on-month fall in weighted average open buyback rate implied surfeit of financial market liquidity. Correspondingly, money stock M3 quickened by 16.52% beyond the 15.21% programmed target and 13.92% in November 2022. This was attributable to the 36.46% growth of net domestic assets following the 20.17% rise in banking system credits to the private sector. With a 5.14 trillion naira year-on-year rise in December 2022 to 29.72 trillion gross credit by the banking industry, maintained up maintained its upward trajectory since 2029, due largely to CBN's loan-to-deposit ratio directives, increased funding industry funding base, and business competition. Satisfyingly, key performance indicators revealed wide-ranging stability of the banking system, with NPLs at 4.21%, liquidity ratio at 44.12%, and capital adequacy ratio at 13.76%, all outdoing their prudential limits. On macroeconomic outlook, as at the time of the last monetary policy meeting, we noted the increasing likelihood of a global recession in 2023. The broad outlook for the recovery of both the global and domestic economies remain uncertain, with a path to full recovery clouded by significant downside risks. The key risks remain the lingering headwinds from the Russian-Ukrainian war, heightened inflationary pressures across several economies, and sharp slowdown of economic activities in China with the resurgence of COVID-19 pandemic across its major cities. Available data and forecasts for key macroeconomic indicators for Nigeria suggest that the economy will continue to grow through 2023, but at a subdued pace. The continued high level of insecurity, perennial scarcity of premium motor spirit PMS, and high cost of other energies and resources increased spending towards the 2023 general elections, which we are doing everything possible to curtail, rising cost of debt servicing, and deteriorating fiscal balances remain the key sources of shocks to the Nigerian economy. Accordingly, the economy is forecast to grow in 2023 by 3.01% by the CBN estimate. Our policy consideration. The monetary policy acknowledged that although year-on-year inflation had started to moderate, the pace of disinflation at a marginal 13 basis points was inadequate and unacceptable and needs to be redoubled. Inflation at over 21% was still hugely damaging to the economy and growth retarded. As such, only further monetary tightening was considered appropriate because a loosening or a hold decision under a double-digit inflationary condition would be tantamount to an immediate reversal of the downward trend in inflation. We also believed that the current Naira redesign and cash withdrawal limit policies, by moderating currency outside the banking system, could further engender disinflation. Although I've been taken up by somebody who said that currency in circulation does not have impact on inflation, but we will leave that outside here. Overall, monetary policy felt that a tightening stance would signal confidence in the effectiveness of its monetary policy direction to rein in inflation, improve financial system stability, and moderate exchange rate. Accordingly, the MPC decided to raise its monetary policy rate by 100 basis points to 17.5%, retain asymmetric corridor at plus 100 and 700 basis points around the MPR, retain the cash reserve ratio at 22.5%, and retain liquidity ratio at 30%. Those were purely issues around monetary policy decisions and the economy and our own view about what happened in 2022 and what might happen given the global conditions in 2023 in the Nigerian economy. Now, on the Naira redesign policies, Your Excellencies, distinguished ladies and gentlemen, as you may recall, the Central Bank of Nigeria received the approval of President Muhammadu Buhari on the 26th of October 2022 to redesign the 200 Naira, 500 Naira, and 1,000 Naira Nigerian bank notes. By the approval, the redesigned bank notes were to circulate concurrently with the old notes up to 31st January 2023, after which the old notes were to lose their legal tender status. However, given the need to improve the level of circulation of the new Naira notes, the President magnanimously extended the deadline by another 10 days to February 10, 2023 for old notes to circulate as legal tender. Currency management is a key function of Central Bank of Nigeria as enshrined in Section 2, subsection B of the Central Bank of Nigeria Act 2007. Indeed, the integrity of a local tender, the efficiency of its supply, as well as its efficacy in the conduct of monetary policy are some of the hallmarks of a great central bank. Due to persistent challenges that are inundating currency management in Nigeria and undermining our sovereign integrity, the CBN conducted extensive in-house analysis and consultation, which suggests the need for a policy to redesign some of the Nigerian banknotes. The currency redesign policy is also consistent with Section 20, subsection 3 of our Act, which gives the bank the power to recall extant banknotes or coins following the approval of the President and a reasonable notice period. Our actions thus fall squarely within the bounds of the powers provided by the CBN Act, as we sought and got presidential approval and gave 100 days notice in the first instance, which was later extended by another 10 days. This was to allow Nigerians to deposit their old banknotes at the CBN and gradually redeem the new notes. As I have reiterated many times before today, the general practice across the globe is for central banks to redesign national currency within 5 to 8 years. From the onset of this currency redesign program, we made it very clear that for over 19 years, the Central Bank of Nigeria has not been able to undertake this important currency and liquidity management function that has important ramification for the effectiveness of monetary policy. Why the design? Our principal aim with the currency redesign initiative is to make monetary policy decisions more efficacious, and like you can see, we have started to see inflation trending downwards and exchange is relatively stable. Again, those who doubt us keep arguing about this, but we keep saying that we have data and we'll continue to rely on our data as basis for decision making at the Central Bank of Nigeria. Secondly, we aim to increase financial inclusion in the country by reducing the number of the unbanked population. We've been at the forefront trying to see what can be done to adopt a cashless economy, and this started since 2012. Indeed, the Bill Gates and even Queen Maxima had visited us at some time in 2018, and we gave a commitment by around the end of 2020 or 2021 that would have moved close to about 80% cashless. Unfortunately, we are still now, or before this policy, at about 60 to 64. We believe that with what we're doing now, we should be able to ramp up cashless. Cashless is something that has gone around practically most of the world today. But unfortunately, we find that in Nigeria, our people still continue to like carrying cash around. Like I said earlier, the cashless policy started in 2012 under my predecessor. Between 2014 and now that I've been governor of the Central Bank of Nigeria, we had made at least 5 reversals at our attempts to really deepen cashless and improve the level of financial inclusion in Nigeria. The reason we did those was because we felt that there was a need for us to deepen a payment system infrastructure. And I know, and we have facts to support the fact that the payment system infrastructure in Nigeria is amongst the best 6 in the world today. So we believe that we have put in place enough infrastructure that will help us attain or achieve the cashless policy that we do aim to attain in line with global best practices. You are all foreign dignitaries representing your countries in Nigeria. And you know, and you will agree with me, that the level at which people carry cash in Nigeria is unacceptable. in your countries, you do not carry cash anyhow. When you carry cash and you are seen, you are questioned. You are questioned and you are profiled continuously. We want to look like your country. And that is the reason why I'm saying Nigeria, being the largest economy in Africa, Nigeria with the largest population in Africa, really must really go cashless. And we are delighted at the Central Bank of Nigeria that with the support of President Muhammadu Buhari, we would achieve this. We know that at these initial stages, Nigerians will go through some what we call temporary pains. And we call it transient. Transient because there will be normal pains that will come with those kind of shocks. Indeed, I must describe this shock as unprecedented. And that is why I will continue to appeal to everybody, Nigerians, and those of you who constitute our diplomatic community, to give us all the needed support for us to achieve this objective. We want our country to look like your country, and we will continue to seek your support for us to be like you. In the area of cashless, in the area of doing things where people handle money the way they should handle cash, and not handle them for illicit purposes. Thirdly, our aim is to support the effort of our security agencies in combating banditry and ransom taking in Nigeria through this program. And we can see that the military are making good progress in this important task. Available data at the Central Bank of Nigeria showed that in 2015, currency in circulation was just 1.4 trillion naira. As at October 2022, currency in circulation had risen, indeed, more than doubled to over 3.2 trillion naira, out of which only 500 billion was within the banking system and 2.72 trillion held in people's homes. And let me, I would say, because I said this in a few, just some, and I will reveal this maybe in my private discussion with the president and with the EFCC chairman sitting. And I was telling the president, Mr. President, do you know why currency in circulation more than doubled? He said, no, tell me why. I said, it's because of this young man, the EFCC chairman. The EFCC chairman looked at me, and I said, in the last 5-6 years, we have, Central Bank of Nigeria came up with a policy where we said that banks must report what is called suspicious transactions. Suspicious transactions, once there's cash transaction or even electronic transactions that go beyond a particular threshold, banks must report them as suspicious transactions. And what happened is that when suspicious transactions are reported by banks to the NFIU, the EFCC and ICPC are obligated to pick those suspicious transactions and investigate them. But of course, what we found is that in the course of investigating them, those who felt that they were being investigated for those suspicious transactions began to abandon the banks and began to build vaults in their homes. That is the reason we've seen currency outside the banking industry at 2.72 trillion out of 3.23 trillion. This is unacceptable. We want a situation where the Central Bank of Nigeria is in firm control of money supply. And like I keep saying, we have our data. The Central Bank of Nigeria, I'm proud to say, is a resource center. We have our data, and we work with data on the basis of which we reach our decisions. And that's why I keep saying that we cannot continue to have a situation where 2.72 trillion out of 3.23 trillion naira is in people's homes. You will not allow it in your country. You have to be in charge. Your Fed or your central bank must be in full control of currency circulation, so decisions they take on monetary policy, whether they want a tight monetary policy or whether they want a loose monetary policy, can be efficacious when they say this is direction, everything flows in that direction, not a situation when they say go in the right direction, people go in the left, because there are people who are holding tons of cash in their homes to undermine monetary policy. It can work. So we need a country so that we can truly be able to direct the economy in the way that we think it should be. So we're saying 2.27 trillion held in people's homes. This indicates that so far we have held excessive amounts of currencies in our hands rather than in banks or in cashless platforms. Ordinarily, when the central bank releases currency into circulation, it is meant to be used, and after a fraction of time, it returns to the CBN, thereby keeping the volume of currency in circulation under the firm control of the CBN. It should also be noted that the notes in private homes and outside the banking system are not available for economic activities and thus may affect the economy from attaining its full potential, its full growth potentials. Our in-house analysis of the pre-policy currency adequacy indicate that not only that currency outside banks was excessive, but also that quantum of currency in circulation was suboptimal. Exhaustive simulation and model-based analysis founded on the drive to achieve a 20 to 40% cashless economy indicate that the optimal volume or value of currency in circulation for the Nigerian economy should just be about 700 out of 3.23. Let's even imagine it's not 700. Let's imagine it's 800 billion. Let's indeed imagine it's 1 trillion naira. If we are saying that 1 trillion naira is optimal, then we cannot allow 3.23 trillion to be in circulation, out of which 2.7 is in people's homes. Monetary policy will not work. This is just a fraction of the hitherto currency supply to the economy and could explain, in part, the excessive demand we have witnessed in foreign exchange market and, to some extent, global goods. Generally, currency design policies are designed by countries to strengthen the performance of key macroeconomic parameters and equally combat social improprieties. Chiefly, it is expected to reduce the amount of cash on the ground and illicit economy, truncate activities of racketeers, and obliterate rent-seeking businesses in the black market. By reducing currency outside banks, it will shrink money stock and accordingly lower the long-run path of inflation. The ensuing deflationary pressure could elicit interest rate cuts that will, in short to medium term, boost economic activities, spur aggregate demand, and enhance output growth. Macroeconomic impacts of currency design are multidimensional and could seem uncertain, especially at this early stage when its inconvenience is widespread. By spurring more people to use bank accounts, this policy will further increase bank account ownership and increase the use of accounts by enhancing people's saving behavior. It could encourage some hitherto informal business operators to formalize the pattern of transactions and adopt more formal settlement channels. As experiences from other jurisdictions have shown, effective monetary policy design can support regulatory reform, increase legislative reach, and coordinated fiscal and structural policies. Aside the general benefits of a currency redesign, we expect a number of economic gains for Nigeria, including 1, reduction in money supply. Effectively, implemented currency redesign causes a fall in money supply. This will lead to reduction of value of money in circulation and a deceleration of the velocity of money in the economy, leading to less pressures on domestic prices. As we mop up cash in circulation, money supply could decline under certain assumptions. In addition, the speed at which money changes hands could reduce. basic economic tenets under the quantity theory of money suggest that the fall in monetary velocity could retard price growth and taper nominal money supply, lowering inflation. The policy is typically expected to cause deflation in the market as less cash holding reduces currency outside banks and retards money circulation. The accompanying decline in money supply will thus slow the pace of inflation. As you can see, we have started to witness inflation trending downwards, following general price stability in almost all genera of market, including goods for goods and financial products. For instance, analysis show that an effective implementation of the policy could by itself scrap 4 percentage points off the current level of inflation as it steadily slows inflation rate to about 18% by the mid of 2023. This is achievable as data from our market sources indicate that prices of grains and key staples around Suleja, Lambata markets, for instance, have generally been on the downward trend since the beginning of this policy. The price of soybeans has dropped from 30,000 to 22,000, maize from 18 to 16,000, and the bull from 400,000 to 330,000. On exchange rate stability, prior to the announcement of the policy, the huge cash haul outside the banking system had exerted significant pressures on exchange rate at all windows, but more so at the parallel market as it engendered asset substitution by speculators and rent seekers. While the policy was initially estimated to lead to more speculations due to panic moves as most people tried to understand the policy actions, it is expected to reduce speculation in the medium to long term. Today, the limited circulation of the new Naira note has forced the hands of speculators, and we are beginning to witness some stability. The initial pressure is projected to further moderate as the implementation of this policy takes off and a wider understanding pervades the system. Why are we seeing cues and the pressure? Before concluding this brief remark, let me state, and sadly too, that we acknowledge the widespread inconveniences due to this policy. We have observed pervasive incidents of hoarding and predatory activities of some vendors and unscrupulous Nigerians. The principal causes of the hardship to the citizens following the redesign include hoarding. We have noticed that some members of the public are hoarding the new Naira notes, thereby restricting their flow through the economy. We repeat, cash kept at homes will not circulate, but may fuel a perception of scarcity, which leads to higher demand for the currency, signaling to those who do not have an urgent or immediate need to store the same cash. Tension and elevated agitation. There is, before I go to tension, on hoarding, what we did, we tried as much as well to make sure that we make this available in a way that it goes around equitably to all Nigerians. But we found some unscrupulous activities by some people. And I will not be too direct, but of course, when people who don't own bank accounts begin to go and stay in queue, they wake up 4 a.m., 2 a.m. to go and stay in the queue for the ATM. And then when it gets to their turn, they sell their turn and go back again and start queuing again. And in a day, he could do that 4 times and then end up to between 8 to 10,000 naira. Instead of going to do his petty business, what he's doing is he's found this as an opportunity to begin to make money. Then those who buy it from them, who are predominantly what we call our POS agents that we thought should help us also deepen financial inclusion, are getting involved in this kind of unfortunate, unscrupulous activities. And we have told the EFCC, the ICPC, working with our CBN monitoring team, to arrest any POS agent that charges any fee, because we had made it clear that whatever is their fee, which is not meant to be more than 200 naira for any amount you exchange, that we in Central Bank, we will pay as part of the cost to lessen the burden of this problem. And let me make it clear, and I'm sure the press is listening to me, we started to arrest them. We will prosecute them, and they will go to jail for getting involved in illegal activity and making our work difficult. We are trying to make things good for our country. We cannot allow even some of our countrymen who want to get involved in illegal and illicit kind of businesses to truncate our efforts and in making the country a good place. They will be arrested. We've seen videos of people who are also stamping money on people in parties, and we have said it is illegal. The law, it is there in our law that it is illegal to stamp money. Those who have been caught, they will go to jail. Because we need to do things right as a country. They have to go to jail so that that can set the example that we must be law-abiding citizens in our country. We should not take advantage of situations to create pain for people who genuinely want to conduct economic activity in the country. On tension and elevated agitation, there is tremendous tension and elevated agitation by our leaders who should be calming frayed nerves by the citizens. We believe that a large proportion of these agitations are staged, they are sponsored propaganda, or an exaggeration of the reality. No doubt, there are pockets of pressures in some areas. The CBN is working hard to shift pressure, to shift resources to those areas in order to ease the tension. The situation is substantially calming down since the commencement of the over-the-counter payment to complement ATM disbursements and the use of super agents. There is therefore no need to consider any shift from the deadline of February the 10th. Panic queues. The CBN has also noticed long queues at some bank ATMs and banking halls. While some of these withdrawals requests are genuine, some are simply the irreprehensible activities of miscreants who do not have the genuine intention of making a withdrawal, but are seeking quick earnings by queuing up just to sell their space for money. Panic mop-off of notes. The CBN has also noticed that some of our leaders are buying the notes and storing them for whatever purposes. I will not be direct here. Incidents of economic optimism. We have also noticed that some Nigerians are capitalizing on the transition to charge exorbitant fees. I talked about that for the POS. These selfish actions for personal monetary gains are creating hardship for Nigerians and may come at the expense of fellow citizens' lives and livelihood. In concluding my remark, let me say that the CBN reiterates the availability of an appropriate and optimal amount of currency of both the 500, 200, and 1,000 denominations, and even the existing 150, 20, to support economic activities. We will continue to issue and circulate new notes, but the truth is that when we get to our optimal level or get to a level that we believe even is slightly above our optimal level, we will seek to put in place policies that will make sure that people must not keep monies in their homes. They must return them back. If you don't return them back, we will do what we need to do to make sure you don't store those monies. Or when you store them, they will be useless in the vaults that you have built in your homes. We are mindful of the challenges some citizens have faced and are addressing them. There have been reports of occasional failures in e-channel platforms, and our monitoring suggests that whilst there has been an expected surge in electronic transactions, these have not risen to unprecedented levels, and the payment system is well equipped to handle even higher transaction volumes. Whilst transactions failures are bound to occasionally occur, the public is encouraged to have full confidence in Nigeria's globally recognized payment system infrastructure. Banks have also been instructed to ensure 24/7 service availability and promptly address any customer refunds arising from such service failures. We remain committed to ensuring a seamless, inclusive, and equitable implementation of this exercise for the overall benefit and the good of our people, the financial system, and the Nigerian economy as a whole. I thank you all for your attention.